In this video, traders are going to look at trading the differential markets on CoreSpreads Australia Core Trader 2 platform. Stay tuned. Hey guys, warm welcome to you. Alright, so differential market, what is it all about? So differential market is really the difference, the ratio between two indices. It could also be equities, but indices gives you a kind of a more broader exposure, obviously, to specific countries. So why would you do this and what's the point? So the idea is you've got obviously different countries with different indexes and different clusters of stocks as a constituent of that index. So for example, we've got US 500, which is the S&P 500 in the US. You've got the Dow, the Nasdaq. There's a few over there. You've got the FTSE 100 in the UK. You've got the German 30 or the DAX in Germany. You've got EURO STOXX 50 to 51s across Europe. There's plenty of them out there. And what happens often is one country's index will start to run or fall more than the others. So you might see a massive bid coming in on the DAX, or you might see a good run for the US and not so much for Europe. Now that could be because of the currency. Obviously, when the currency is affected, that is going to affect the price of the index. You start to see it weaken or strengthen. That has an impact, positive or negative, depending on which way you're looking at it, to the actual underlying, because it means you have to, as a foreign perspective, for example, you have to put up less money to buy the same stock as you could a week ago because the currency, the exchange rate has changed. So there is that. So you've got to be careful that the fuel is not necessarily the underlying currency exchange rate, because if it is, you might be better off just trading that directly. But sometimes you just find them moving in ebbs and flows, and very often what happens is maybe one country or one specific market will move and then it will stagnate as the others will follow. So money will then rotate out of that back into US, or maybe it'll rotate back from US into Europe, and money will flow around. And sometimes it's just because there's money flowing in or out of a specific index that causes it to run more than the others. So how do you capitalize that and take advantage of that opportunity? Well, you can buy one and sell the other. So you can have a long trade on one and a short on the other and look for a move between the two. Now, when a long trade on one and a short on the other, what you're looking for is not them to move up or down, because if the whole global economy moves up, let's say all of them move up, you're not going to make any money, because you make money on the long, but you lose money on your short. Same as moving down. So it's kind of neutral on indices as a whole. But what you're basically saying and trying to express with that trade is that I believe that the gap between the two of these is going to narrow. Now, they could go up and it narrow, or they could go down and it narrow. So your long hopefully is going to go up more than your short, so it's going to catch up and you're going to make the difference between the two. And same to the downside. Hopefully, short's going to go down more than your long, and you'll kind of make the difference between the two. So you're trading the differential, or if they stay flat, you're hoping that they kind of come back together and the long goes up and the short goes down, which is also obviously possible. Doesn't matter which way it does it, because you're positioned that way, you're looking for differential. However, the problem with that is you have to trade twice. So you've got two different spreads, and it's eating up all your margin. So you've got the margin with one and margin with the other. And arguably, you could say that it's less risk, because actually you're not exposed to shock waves across the global economy. If there's a global shock wave, then the US market tanks. The European market is going to tank as well. So you're going to be somewhat protected and hedged. So it's a way of neutralizing your exposure a little bit. You've still got exposure, but it also allows you to pick off perhaps markets that have kind of run off, and you think, well, why is that just suddenly run off? I don't want to just short it naked and have complete risk on it, because it could still go, but I think it might run out of steam, and also think the other economies, the other indices, should I say, will catch up with it. So that leads me to the differentials, which are offered by CoreSpreads Australia. If you go into their Core Trader 2 platform, which we'll check out in a second, and you can see a selection of differential markets you can trade from one ticket. So the differential is all done for you, and you can trade the ratio between the two without having to open two trades. So let's go to the platform and check it out. All right, guys, so I'm logged into the Core Trader 2 platform now from CoreSpreads Australia. And we can go on the left-hand side here to Market Explorer, and under the Indices tab, or Indices button, we can expand that, and we've got differentials, and this is differentials market. So they're offering German 30 and EURO STOXX 50, German 30 and France 40, so the CAC and DAX and the CAC differential, DAX and FTSE, so the UK 100 is the equivalent of the FTSE, UK 100 and EURO STOXX differential, Wall Street 30, German 30, so that's the Dow and the DAX, and then we've got the DAX, the Dow and the FTSE. So good selection here. And what you can see now, guys, is that you can take a position based on the differential without having to open 2 tickets. So let's have a look at, let's say, Germany UK 100, because Germany has just been, ripping to the upside recently as I'm filming this. Real crazy, big, strong move. And we want to be able to see that if we want to express a trade that may be saying short Germany, long for UK 100. So out of interest, let's see what the spread is. So the spread, not too bad, guys. It looks like it's about less than 4 points. Keeps moving, flicking around, but it's about 3 and a bit points, which is not too bad when you consider you're taking 2 trades there. And also being a future, double check it on your platform, but it looks like the expiry is of September, so you're not going to have any overnight charges with that. So let's have a look. So we start to open the chart, and actually it's a good thing, guys, even if you're not trading it per se, you can always look at it and say, hey, how's it performing? It's a good way visually of performing, of using the CoreTrader 2 platform to visually see the spread trade and to see how much DAX has outperformed FTSE over this period. So we can see from the middle of August, it's just literally ripped off the upside. So we can start to look at it, maybe do some analysis and go, well, actually, this is coming up to a level where it's quite extended, and so we could express that trade, and just like we normally would do, we could open the trade, we could set a stop. So again, one thing that's kind of a little bit awkward when you're trading a differential with 2 tickets is that you've got to have a stop. But you can't really have a stop on one, because if you have a stop on one, you want to see what the other one's doing. It depends on the ratio between the 2, not one. If they both kind of shoot up 500 points, you still made nothing. You don't want to be stopped out. And so it's very difficult to manage the risk without being there. Whereas with this, you can easily manage the risk. You can easily open your trade up, put your order in. So you open your trade up. I've actually opened DAX CAC here, but you can add your stop and limit. You put your order in here. You can add your stop and limit. If we've got to select, it's asking me to select. We can add our stop and limit and attach it to the order. So again, it would be based on the ratio. So we could have our stop, let's say, 100 points higher here, looking for a 200 or 300 point move to the downside, and very easily we can express that. So that's it, guys. Very easy to scan through and see those charts we just saw on the platform there. We can just open the chart up. Nice that we can do it from 1 ticket and we can manage the risk, because we can't do that when we've got 2 independent things, because we're looking at the ratio of the 2. They can shoot up or shoot down. Doesn't matter. We're looking at the 2, so we can manage the risk. And of course, we can put limits in, so we can frame our trade. We can open our chart up. We can decide, hey, we think that's outperforming, that's underperforming. We think they're going to contract and kind of converge back together. And if that's the case, open the ticket and we can express our view on that from 1 trade and manage the risk accordingly. Frame the trade, put the stop in, put the limit in, etc. So it's a nice different way of maybe approaching things if things start to get out of sync and money flow starts to move a little bit more aggressively from one place to the other. Anyway, guys, that is the differentials market. Again, you can see on the Market Explorer indices differentials. Go and check it out on the CoreTrader 2 platform. And that was sponsored by CoreSpreads Australia. If you want to check those guys out, there's a link to them in the description below. Go and see if they're right for you. Open an account, have a look, and see how you get on. All right, guys, take care. See you next one. Bye-bye.